Welcome to Debra Diamond's YouTube channel, and I'm Debra Diamond, and thanks for joining me. For those of you who are not familiar with me, I'm an author and speaker. I'm also a psychic medium. I'm a former Wall Street money manager, CNBC commentator, and Johns Hopkins University professor who left a high-profile life to pursue a life of meaning and purpose. And I bring you these YouTube videos with the hope that they will also enhance your lives and enhance your pursuit of spirituality. So thank you for joining me. Thanks for liking and subscribing. And thank you for passing these videos on to your family and friends and sharing them. I'm thinking about, as we're increasing our subscribers, I'm thinking about offering a free reading, a mini reading, for those of you who are watching these videos once we hit 2,000 subscribers. So please stay tuned for that. Today I want to talk to you about our economy, inflation, deflation, money supply, and the backdrop and where we're going as a result of the extraordinary circumstances that we find ourselves in. Because I'm a former money manager, I have an MBA in finance, I continue to watch and become involved to a certain extent with the investment environment, with economics, with the news. It, entails all of that. Once you've been on Wall Street, it really doesn't leave your blood. It's part of you. So I've continued to kind of keep one ear perked for that sort of information, and I process it. And I'm going to pass along to you some insights that I have because of that. So one thing is, if you've been watching these videos, back in March, I recommended that people start to look at gold. And since then, gold is up 15% since March. It's actually up 20% since the start of the year. The S&P 500 is down 2%. Now, gold continues to look very attractive because not only the United States, but other economies as well are debasing their currency. And what does that mean? What does debasement mean? That means turning on the printing presses, and that's what we're doing. This started in 2008 with Ben Bernanke when he was head of the Fed. There was one thing that they decided that they couldn't tolerate, and that was deflation. So the result of that and the conclusion they reached was to turn on the printing presses. And since then, it's become institutionalized. Whenever there's a crisis, we turn on the printing presses. Sounds great, right? Except there's one problem. You can't create money out of thin air. We've been doing this, and all these years we continue to debase our currency. The difference this time around is that we've done it in the trillions of dollars. This is, by order of magnitude, so much larger than any other time in history. And the results are going to be eventually hyperinflation. First, it's going to be deflation because there's a lack of demand right now. You've seen it in companies going bankrupt very quickly. You've seen it in terms of people having to very quickly pivot to new business models. But we're not done. This deflationary impact is going to continue for a while as long as we're still dealing with COVID and unemployment and overcapacity in some industries. And as a matter of fact, what's going to happen is after many years of having so many choices, all of us have had so many choices when we wanted to buy something. It wasn't just one choice. It wasn't chocolate, vanilla, or strawberry. It was thousands of choices. It was really kind of mind-boggling to try to make a decision about what product is better than another. Well, I have news for you. It's not going to be that in the future because, companies are going to be going out of business. There'll be less competition. And at some point, what's going to happen is the fulcrum will shift so that demand will come back, but there'll be fewer companies available to provide consumers with their needs. So that leads to an inflationary environment on top of the printing, the debasement of our currency. Now, we're not the only ones that are doing this. It's institutionalized. They're doing it in the in the EU, in Japan. The guy who's in charge of currency printing gets up every morning and goes and prints more money. So this is something they're doing all over the world. As an experiment, it's never worked before. It led to the downfall of Rome in the 3rd century. So it'll work for a while, but it won't work forever. And what that inflation means is that it's very hard for people to maintain their style of living because the prices just keep getting, keep moving up as their income stays the same. Although it will be good for interest rates at some point if you do have any money, the money that you earn, the interest that you earn on fixed investments will increase. And that's a positive if you have money. So besides gold being attractive, silver is also attractive. Silver is a much smaller market and it moves after gold. It's leveraged. So because it's smaller, the moves are much more they're much larger because of the leverage. So silver is also attractive. And gold and silver in times of crisis have always been a store of value. It's it's a currency itself. Both of them are currencies, and it's not just a currency in the United States. It's a currency all over the world. Gold and silver have been treated that way for thousands of years. So it will, we're going to have this cycle again, and gold and silver prices will rise. Now, these are my beliefs. You need to develop your own beliefs, and you probably watch other YouTube videos and read lots of books and read the news. So you'll develop your own beliefs about this and decide what you need to do. If you have a broker or a money manager, an investment advisor, you can talk to them about what's the best for you. I don't make recommendations. So I also want to mention that our governments, in this pursuit of this happy printing press philosophy, are behaving exactly the same way that they were that led us to this crisis. Now, COVID was the mechanism to sort of blow everything up, but there were underlying issues of management. We have trashed our environment and the earth. Institutions were, out of control. There were so many things that we had an opportunity to fix and we didn't. And this new playing field that we find ourselves in because of the coronavirus is taking care of this. The universe is taking care of this. There's one thing they haven't taken care of, so the political structures around the world are still pretty much intact. And because of these political structures and the people that they appoint, folks in charge also appoint the people who run the printing presses and control monetary policy. So as a result of that, the same philosophy of more is better and more to the thousandth power is even better, except it's not. So, they're doing this with the money supply. They're doing the same thing with the money supply and the printing presses that they did. It's the same behavior that's been exhibited with all the incidents that led up to where we are today that are now being corrected, the excesses. And so, there are excesses in this field as well, and they'll be corrected. And I believe that the way they'll be corrected is through other currencies. I've talked about it before. In terms of a digital currency, China already has one, and it goes around the banking system. It's a digital yuan. So, there's lots of things coming. And, all I know is that what they're doing now is not sustainable. It's a short-term solution that could have really horrific long-term consequences. And people who are in political office don't have to think about some of those things because their office's terms of limit are short-term. So that's kind of where we are today. I'm not trying to be negative. I know some of you are going to say, who is this lady? This is just so depressing and negative. Unfortunately, this is, sort of where we are right now. And, I've been through many cycles, having been on Wall Street for many, many years, good times and bad times, expansions and recessions. So I have a little bit of perspective, but, and I'm not the only one saying this. So it's just some thoughts that I want to share with you. So I thank you for joining me and listening. If you enjoy these YouTube videos, please like them. Please subscribe. You'll have a chance to win a mini reading when we get to 2,000 subscribers. And please share them with your family and friends. So thank you.